think. Someone let me know if I'm streaming. That would be helpful. Yep, looks like we're live. Sweet. Can you hear me? Hopefully you can hear me. Let me get my microphone in a better place. Hello, hello. Check 1 2. There we go. Looks like we're live. Yep, there we go. So yeah, we're going to react to some earnings releases that came out, and then we're going to jump into the Meta earnings conference call here in about 10 minutes. So bear with me as I jump over to some stock charts. Nope. Yep, there we go. Here's Meta after hours. Closed at around, let's see, where did the stock close? This chart's going to be messy. Closed at around 476 before earnings came out. When earnings were released, it shot up to as high as 515 per share. It's kind of been digesting that move since, but it hasn't given up all of its gains. Meta did beat basically every metric. They beat on the top line revenue. They beat on the bottom line earnings. They beat the whisper number expectations for the company. So they reported actual earnings per share of $5.16 per share, which was better than the whisper number of 501 and the EPS expectation of 473. Their revenue also came in above expectations, 39.07 billion versus expectations of 38.3. Solid beat, basically on every part of every metric that you could look at for Meta. So yeah, very good quarter. Seems like they're eating some of Elon Musk's lunch, as nobody uses X for advertising anymore. Let's see, other companies that reported today, Qualcomm. Qualcomm reported a beat on the top and the bottom line. They were expected to post EPS of $2.25 per share and revenue of $9.2 billion. They came in at $2.33 per share for EPS and actual revenue of $9.39 billion. They did miss the whisper number, which was $2.40 a share. So shame on them. But the stock is up. Seems like investors are able to look past that slight miss of a whisper number. Very strong results, very strong earnings from Qualcomm. eBay also reported today. Do I not have eBay on here? I don't. Wow. Okay. Well, here you go. eBay. Stock's now down on the news. They reported inline revenue of $2.6 billion, with a slight earnings per share beat of they posted $1.18 per share versus a whisper number of $1.14 and EPS expectations of $1.13. Not sure why the stock's selling off. It was up on the day. A lot of stocks went up on the day because of AMD's strong results yesterday. So some of these got punished, which leads me to ARM Holdings. ARM Holdings reported a beat of both the top and the bottom line. They beat the whisper number. They reported revenue solid revenue of $939 million versus expectations of $903 million. They did issue disappointing earnings per share guidance for the next quarter, which I believe is why the stock is lower. Analysts expected EPS of 27 cents per share, and they're now guiding to a range of 23 to 27 cents per share. So the midpoint of that is below analyst expectations. Stock kind of rallied on the back of AMD news, so we are seeing it sell off here in after hours. Those are the four companies. Did I say that? Qualcomm? Yeah, I got all four. But yeah, we are going to be focusing on Meta here. I should probably build a scene for this. I should have done this before I went live. I'm a bad streamer. I'm sorry. But yeah, we're gonna switch. Yeah, I don't know. How would I do this? I think I have an idea. There you go. Yeah, we're still on music for the Meta call. I think that it starts in about 7 minutes. Let me see if I can create another source. So I'm doing this on the fly. Please understand. Window capture 7. Yeah, that's what I was thinking. There you go. How about that? I'll switch it to a 1 minute chart too. Does that look good? How do we feel about that? We feeling that? Hastily made. Or I could, you know what? Let me make it look prettier. There you go. I am a professional. There we go. Boom. God. So yeah, we're still waiting to take a look at stock charts because this is the end of the month, so there are going to be some interesting setups, and I'd like to take a look with you folks. And if you have any questions, feel free to shoot them off in the Twitch chat. I also have some from our Shacknews chatty forum that I posted a thread yesterday asking people if they had anything they wanted me to look at, so I'll be doing that. I'm going to refresh this to make sure. I know. It's fine. I guess they can afford it. Oh, here we go.
Good afternoon. My name is Krista, and I will be your conference operator today.
See you after the call.
At this time, I would like to welcome everyone to the Meta second quarter earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. To withdraw your question, again, press star 1. We ask that you limit yourself to one question. This call will be recorded. Thank you very much. Kenneth Dorell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta Platforms' second quarter 2024 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
All right. Thanks, Ken. And hey, everyone. Thanks for joining today. This was a strong quarter for our community and business. We estimate that there are now more than 3.2 billion people using at least one of our apps each day. The growth we're seeing here in the U.S. has especially been a bright spot. WhatsApp now serves more than 100 million monthly actives in the U.S., and we're seeing good year-over-year growth across Facebook, Instagram, and Threads as well, both in the U.S. and globally. I'm particularly pleased with the progress that we're making with young adults on Facebook. The numbers we're seeing, especially in the U.S., really go against the public narrative around who's using the app. A couple of years ago, we started focusing our apps more on 18 to 29-year-olds, and it's good to see that those efforts are driving good results. Another bright spot is Threads, which is about to hit 200 million monthly actives. We're making steady progress towards building what looks like it's going to be another major social app. And we're seeing deeper engagement, and I'm quite pleased with the trajectory here. The big theme right now is, of course, AI, and I'll focus my comments today on three areas: what AI means for our family of apps and core business, what new AI experiences and opportunities we see, and how AI is shaping our metaverse work. So let's start. Across Facebook and Instagram, advances in AI continue to improve the quality of recommendations and drive engagement. And we keep finding that as we develop more general recommendation models, content recommendations get better. In this quarter, we rolled out our full-screen video player and unified video recommendation service across Facebook, bringing Reels, longer videos, and Live into a single experience. And this has allowed us to extend our unified AI systems, which had already increased engagement on Facebook Reels more than our initial move from CPUs to GPUs did. Over time, I'd like to see us move towards a single unified recommendation system that powers all of the content, including things like people you may know, across all of our surfaces. We're not there yet, so there's still upside, and we're making good progress here. AI is also going to significantly evolve our services for advertisers in some exciting ways. It used to be that advertisers came to us with a specific audience they wanted to reach, like a certain age group, geography, or interests. Eventually, we got to the point where our ad systems could better predict who would be interested than the advertisers could themselves. But today, advertisers still need to develop creative themselves. And in the coming years, AI will be able to generate creative for advertisers as well, and we'll also be able to personalize it as people see it. Over the long term, advertisers will basically just be able to tell us a business objective and a budget, and we're going to go do the rest for them. We're going to get there incrementally over time, but I think this is going to be a very big deal. Moving on to some of the brand new experiences that AI enables. Last quarter, we started broadly rolling out our assistant, Meta AI, and it is on track to achieve our goal of becoming the most used AI assistant by the end of the year. We have an exciting roadmap ahead of things that we want to add, but the bottom line here is that Meta AI feels like it is on track to be an important service, and it's improving quickly, both in intelligence and features. Some of the use cases are utilitarian, like searching for information or role-playing difficult conversations before you have them with another person. And other uses are more creative, like the new Imagine Yourself feature that lets you create images of yourself doing whatever you want in whatever style you want. And part of the beauty of AI is that it's general. So we're still uncovering the wide range of use cases that it's valuable for. An important part of our vision is that we're not just creating a single AI, but enabling lots of people to create their own AIs. And this week, we launched AI Studio, which lets anyone create AIs to interact with across our apps. I think that creators are especially going to find this quite valuable. There are millions of creators across our apps, and these are people who want to engage more with their communities, and their communities want to engage more with them, but there are only so many hours in the day. So now they're going to be able to use AI Studio to create AI agents that can channel them to chat with their community, answer people's questions, create content, and more. So I'm quite excited about this. But this goes beyond creators too. Anyone is going to be able to build their own AIs based on their interests or different topics that they are going to be able to engage with or share with their friends. Business AIs are the other big piece here. We're still in alpha testing with more and more businesses. The feedback we're getting is positive so far. Over time, I think that just like every business has a website, a social media presence, and an email address, in the future, I think that every business is also going to have an AI agent that their customers can interact with. And our goal is to make it easy for every small business, eventually every business, to pull all of their content and catalog into an AI agent that drives sales and saves them money. When this is working at scale, I think that this is going to dramatically accelerate our business messaging revenue. There are a lot of other new opportunities here that I'm excited about too, but I'll save those for another day when we're ready to roll them out. The engine that powers all these new experiences is the Llama family of foundation models. And this quarter, we released Llama 3.1, which includes the first frontier-level open source model, as well as new and industry-leading small and medium-sized models. The 405 billion model has better cost performance relative to the leading closed models, and because it's open, it is immediately the best choice for fine-tuning and distilling your own custom models of whatever size you need. I think we're going to look back at Llama 3.1 as an inflection point in the industry, where open source AI started to become the industry standard, just like Linux is. I often get asked why I'm so bullish on open source. I wrote a letter along with the Llama 3.1 release explaining why I believe that open source is better for developers, for Meta, and for the world more broadly. My view is that open source will be safer, will enable innovation that improves all of our lives faster, and will also create more shared prosperity. For Meta's own interests, We're in the business of building the best consumer and advertiser experiences. And to do that, we need to have access to the leading technology infrastructure and not get constrained by what competitors will let us do. But these models are ecosystems. They're not just kind of isolated pieces of software that we can develop by ourselves. So if we want the most robust ecosystem of tools, efficiency improvements, silicon optimizations, and other integrations to develop around our models, then we need them to be widely used by developers across the industry. And once we know that we're going to have access to the leading models, then I'm confident that we're going to be able to build the best social and advertising experiences. Part of why I'm so optimistic about this is that we have a long track record of success with open source. We've saved billions of dollars with Open Compute Project by having supply chains standardized on our infra designs. Open sourcing tools like PyTorch and React has led to real benefits for us from all of the industry's contributions. This approach has consistently worked for us, and I expect it will work here too. Another major area of focus is figuring out the right level of infra capacity to support training more and more advanced models. Llama 3 is already competitive with the most advanced models, and we're already starting to work on Llama 4, which we're aiming to be the most advanced in the industry next year. We are planning for the compute clusters and data we'll need for the next several years. The amount of compute needed to train Llama 4 will likely be almost 10 times more than what we used to train Llama 3, and future models will continue to grow beyond that. It's hard to predict how this will trend multiple generations out into the future, but at this point, I'd rather risk building capacity before it is needed rather than too late, given the long lead times for spinning up new infra projects. And as we scale these investments, we're of course going to remain committed to operational efficiency across the company. The last area that I want to discuss is how AI is shaping our metaverse work, which continues to be our other long-term focus. Last quarter, I discussed how advances in AI have pulled in the timelines for some of our products. A few years ago, I would have predicted that holographic AR would be possible before smart AI, but now it looks like those technologies will actually be ready in the opposite order. We're well positioned for that because of the Reality Labs investments that we've already made. Ray-Ban Meta glasses continue to be a bigger hit sooner than we expected, thanks in part to AI. Demand is still outpacing our ability to build them, but I'm hopeful that we'll be able to meet that demand soon. Essilor-Luxottica has been a great partner to work with on this, and we are excited to team up with them to build future generations of AI glasses as we continue to build our long-term partnership. Quest 3 sales are also outpacing our expectations, and I think that's because it is not just the best MR headset for the price, but it's the best headset on the market, period. In addition to gaming, people are increasingly taking advantage of Quest's capabilities as a general computing platform, spending time watching videos, browsing websites, extending their PC via virtual desktop, and more. Horizon also continues to grow across VR, mobile, and desktop, and I expect that it will become an increasingly important part of that ecosystem as well. We're hosting our annual Connect conference on September 25th, and we will have lots of exciting updates around all of our AI and metaverse work, so I encourage you to tune into that. At the end of the day, we are in the fortunate position where the strong results that we're seeing in our core products and business give us the opportunity to make deep investments for the future. And I plan to fully seize that opportunity to build some amazing things that will pay off for our community and our investors for decades to come. The progress we're making on both the foundational technology and product experiences suggests that we're on the right track. I'm proud of what our team has accomplished so far, and I'm optimistic about our ability to execute on the opportunities ahead. As always, thank you to our teams who are pushing all of this important work forward, and thanks to all of you for being on this journey with us. And now here is Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis, unless otherwise noted. Q2 total revenue was $39.1 billion, up 22%, or 23% on a constant currency basis. Q2 total expenses were $24.2 billion, up 7% compared to last year. In terms of the specific line items, cost of revenue increased 23%, driven primarily by higher infrastructure and Reality Labs inventory costs. R&D increased 13%, primarily driven by higher headcount-related expenses and infrastructure costs, which were partially offset by lower restructuring costs. Marketing and sales decreased 14%, due mainly to lower restructuring and headcount-related costs. G&A decreased 12%, mostly due to lower legal-related expenses. We ended the first quarter with almost 70,800 employees, up 2% from Q1. Second quarter operating income was $14.8 billion, representing a 38% operating margin. Our tax rate for the quarter was 11%. Net income was $13.5 billion, or $5.16 per share. Capital expenditures, including principal payments on finance leases, were $8.5 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $10.9 billion. We repurchased $6.3 billion of our Class A common stock and paid $1.3 billion in dividends to shareholders, ending the quarter with $58.1 billion in cash and marketable securities and $18.4 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow, with approximately 3.27 billion people using at least one of our Family of Apps on a daily basis in June. Q2 total Family of Apps revenue was $38.7 billion, up 22% year over year. Q2 Family of Apps ads revenue was $38.3 billion, up 22% or 23% on a constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth, followed by gaming and entertainment and media. On a user geography basis, ad revenue growth was strongest in Rest of World and Europe at 33% and 26% respectively. Asia Pacific grew 20% and North America grew 17%. On an advertiser geography basis, total revenue growth continued to be strongest in Asia Pacific at 28%, though growth was below the first quarter rate of 41% as we lapped a period of stronger demand from China-based advertisers. In Q2, the total number of ad impressions served across our services and the average price per ad both increased 10%. Impression growth was mainly driven by Asia Pacific and Rest of World. Pricing growth was driven by increased advertiser demand, in part due to improved ad performance. This was partially offset by impression growth, particularly from lower monetizing regions and surfaces. Family of Apps other revenue was $389 million, up 73%, driven primarily by business messaging revenue growth from our WhatsApp business platform. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q2, Family of Apps expenses were $19.4 billion, representing approximately 80% of our overall expenses. Family of Apps expenses were up 4%, mostly due to higher infrastructure and headcount-related expenses, which were partially offset by lower restructuring costs. Family of Apps operating income was $19.3 billion, representing a 50% operating margin. Within our Reality Labs segment, Q2 was $353 million, up 28%, driven primarily by Quest headset sales. Reality Labs expenses were $4.8 billion, up 21% year over year, driven mainly by higher headcount-related expenses and Reality Labs inventory costs. Reality Labs operating loss was $4.5 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. To deliver engaging experiences, we remain focused on executing our priorities, including video and in-feed recommendations. On Instagram, Reels engagement continues to grow as we make ongoing enhancements to our recommendation systems. Part of this work has been focused on increasing the share of original posts within recommendations so people can discover the best of Instagram, including content from emerging creators. Now, more than half of recommendations in the US come from original posts. On Facebook, we're seeing encouraging early results from the global rollout of our unified video player and ranking systems in June. This initiative allows us to bring all video types on Facebook into one viewing experience, which we expect will unlock additional growth opportunities for short-form video as we increasingly mix shorter videos into the overall base of Facebook video engagement. We expect the relevance of video recommendations will continue to increase as we benefit from unifying video ranking across Facebook and integrating our next-generation recommendation systems. These have already shown promising gains since we began using the new systems to support Facebook Reels recommendations last year. We expect to expand these new systems to support more surfaces beyond Facebook video over the course of this year and next year. We're also seeing good momentum with our longer-term engagement priorities, including generative AI and threads. People have used Meta AI for billions of queries since we first introduced it. We're seeing particularly promising signs on WhatsApp in terms of retention and engagement, which has coincided with India becoming our largest market for Meta AI usage. You can now use Meta AI in over 20 countries and 8 languages, and in the US, we're rolling out new features like Imagine Edit, which allows people to edit images they generate with Meta AI. Beyond generative AI, the Threads community also continues to grow and deepen their engagement as we ship new features and enhance our content recommendation systems. Now to the second driver of our revenue performance, increasing monetization efficiency. There are 2 parts to this work. The first is optimizing the level of ads within organic engagement. We continue to see opportunities to grow ad supply on lower monetizing surfaces like video, including within Facebook as the mix of overall video engagement shifts more to shorter videos over time, which creates more ad insertion opportunities. More broadly, we are continuing to get better at determining the best ads to show and when to show them during a person's session across both Facebook and Instagram. This is enabling us to drive revenue growth and conversions without increasing the number of ads, or in some cases, even reducing ad load. The second part of improving monetization efficiency is enhancing marketing performance. We continue to be pleased with our progress here, with AI playing an increasingly central role. We're improving ad delivery by adopting more sophisticated modeling techniques made possible by AI advancements, including our Meta Lattice ad ranking architecture, which continued to provide ad performance and efficiency gains in the second quarter. We're also making it easier for advertisers to maximize ad performance and automate more of their campaign setup with our Advantage Plus suite of solutions. We're seeing these tools continue to unlock performance gains, with a study conducted this year demonstrating 22% higher return on ad spend for U.S. advertisers after they adopted Advantage Plus shopping campaigns. Advertiser adoption of these tools continues to expand, and we're adding new capabilities to make them even more useful. For example, this quarter we introduced flexible format to Advantage Plus shopping, which allows advertisers to upload multiple images and videos in a single ad that we can select from and automatically determine which format to serve in order to yield the best performance. We have also now expanded the list of conversions that businesses can optimize for using Advantage Plus shopping to include an additional 10 conversion types, including objectives like add to cart. Looking forward, we believe generative AI will play a growing role in how businesses market and engage with customers at scale. We expect this technology will continue to make it easier for businesses to develop customized and diverse ad creatives. We've seen promising early results since introducing our first generative AI ad features, image expansion, background generation, and text generation, with more than 1 million advertisers using at least one of these solutions in the past month. In May, we began rolling out full image generation capabilities into Advantage Plus Creative, and we're already seeing improved performance from advertisers using the tool. Finally, we expect AI will help businesses communicate with customers more efficiently through messaging. We're starting by testing the ability for businesses to use AI in their chats with customers to help sell their goods and services and to generate leads. While we are in the early stages, we continue to expand the number of advertisers we're testing with and have seen good advances in the quality of responses since we began using Llama 3. Next, I would like to discuss our approach to capital allocation, which remains unchanged. We continue to invest both in enhancing our core experiences in the near term and developing technologies that we believe will transform how people engage with our services in the years ahead. We expect that having sufficient compute capacity will be central to many of these opportunities. So we are investing meaningfully in infrastructure to support our core AI work in content ranking and ads, as well as our generative AI and advanced research efforts. Our ongoing investment in core AI capacity is informed by the strong returns we've seen and expect to deliver in the future as we advance the relevance of recommended content and ads on our platform. While we expect the returns from generative AI to come in over a longer period of time, we are mapping these investments against the significant monetization opportunities that we expect to be unlocked across customized ad creative, business messaging, a leading AI assistant, and organic content generation. As we scale generative AI training capacity to advance our foundation models, we will continue to build our infrastructure in a way that provides us with flexibility in how we use it over time. This will allow us to direct training capacity to GenAI inference or to our core ranking and recommendation work when we expect that doing so would be more valuable. We will also continue our focus on improving the cost efficiency of our workloads over time. Reality Labs remains our other long-term initiative that we continue to invest meaningfully in. Quest 3 is selling well, and Ray-Ban Meta smart glasses are showing very promising traction, with the early signals that we are seeing across demand, usage, and retention increasing our confidence in the long-run potential of AR glasses. Finally, as we pursue these investments across near and long-term priorities, we will remain focused on operating the business efficiently. Turning now to the revenue outlook. We expect third quarter 2024 total revenue to be in the range of $38.5 to $41 billion. Our guidance assumes foreign currency is a 2% headwind to year-over-year total revenue growth based on current exchange rates. Turning now to the expense outlook. We expect full year 2024 total expenses to be in the range of $96 with our expanded infrastructure footprint. Turning now to the CapEx outlook. We anticipate our full year 2024 capital expenditures will be in the range of $37 to $40 billion, updated from our prior range of $35 to $40 billion. While we continue to refine our plans for next year, we currently expect significant CapEx growth in 2025 as we invest to support our AI research and our product development efforts. On to tax. Absent any changes to our tax landscape, we expect our full year 2024 tax rate to be in the mid-teens. In addition, we continue to monitor an active regulatory landscape, including the increasing legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. In closing, Q2 was another good quarter. We continue to execute well across our business priorities and have exciting opportunities in front of us to deliver more value to the people and businesses using our products around the world. With that, Krista, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star one on your touch-tone phone. To withdraw your question, again, press star one. And please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Brian Nowak from Morgan Stanley. Please go ahead.
Great. Thanks for taking my questions. I have two, one for Mark, one for Susan. Mark, I wanted to sort of go back to some of the new generative AI-enabled use cases for users and advertisers. You talked about Meta AI, Studio, chatbots, diffusion models. If you could just sort of hone in on one or two of those that you're most excited about, where you're seeing good signal that could be a real driver for the business in 25, 26, just so we sort of know, where are you most focused on all those opportunities and be helpful. And the second one, Susan, you have a lot of CapEx priorities from building new infrastructure for next generation models, compute capacity. Just walk us through again on the CapEx philosophy and any guardrails you have around ensuring you generate a healthy return on invested capital for investors from all the CapEx. Thanks.
I can take the first one. So I think the things that will drive the most results in 25 and 26 are actually the first category of things that I talked about in my comments, which are the ways that AI is shaping the existing products. So the ways that it's improving recommendations and helping people find better content, as well as making the advertising experiences more effective. I think that there's a lot of upside there. Those are already products that are at scale. The AI work that we're doing is going to improve that. It'll improve the experience and the business results. The other areas that we're working on, I mean, I think you all know this from following our business for a while, but we have a relatively long business cycle of starting a new product, scaling it to something that reaches 1 billion people or more, and only then really focusing on monetizing at scale. So, realistically, for things like Meta AI, or AI Studio, I mean, these are things that I think will increase engagement in our products and have other benefits that will improve the business and engagement in the near term. But before we're really talking about monetization of any of those things by themselves, I mean, I don't think that anyone should be surprised that I would expect that will be years, right? I think that's like what we've seen with Reels. It's what we saw with all of these things. But I think, for those who have followed our business for a long time, you can also get a pretty good sense of when things are going to work years in advance. And I think that the people who bet on those early indicators tend to do pretty well, which is why I wanted to share in my comments the early indicator that we had on Meta AI, which is, I mean, look, it's early. Last quarter, I think had just started rolling it out a week or two before our earnings call. This time, we're a few months later, and what we can say is I think we are on track to achieve our goal of being the most used AI assistant by the end of this year. And I think that's a pretty big deal. Is that the only thing we want to do? No. I mean, we obviously want to kind of grow that and grow the engagement on that to be a lot deeper, and then we'll focus on monetizing it over time. But the early signals on this are good, and I think that that's kind of all that we could reasonably have insight into at this point. But I do think that part of what's so fundamental about AI is it's going to end up affecting almost every product that we have in some way. It will improve the existing ones and will make a whole lot of new ones possible. So it's why there are all the jokes about how all the tech CEOs get on these earnings calls and just talk about AI the whole time. It's because it's actually super exciting and it's going to change all these different things over multiple time horizons.
And Brian, I can take the second question. On the ROI part of your question, I would broadly characterize our AI investments into two buckets, core AI and Gen AI. And the two are really at different stages as it relates to driving revenue for our businesses and our ability to measure returns. On our core AI work, we continue to take a very ROI-based approach to our investment here. We're still seeing strong returns as improvements to both engagement and ad performance have translated into revenue gains, and it makes sense for us to continue investing here. Gen AI is where we're much earlier, as Mark just mentioned in his comments. We don't expect our Gen AI products to be a meaningful driver of revenue in 24, But we do expect that they're going to open up new revenue opportunities over time that will enable us to generate a solid return off of our investment while we're also open sourcing subsequent generations of Llama. And we've talked about the 4 primary areas that we're focused here on: the Gen AI opportunities to enhance the core ads business, to help us grow in business messaging, the opportunities around Meta AI, and the opportunities to grow core engagement over time. The other thing I would say is we're continuing to build our AI infrastructure with fungibility in mind so that we can flex capacity where we think it will be put to best use. The infrastructure that we build for Gen AI training can also be used for Gen AI inference. We can also use it for ranking and recommendations by, making certain modifications like adding general compute and storage. And we're also employing a strategy of staging our data center sites at various phases of development, which allows us to flex up to meet more demand and less lead time if needed, while limiting how much spend we're committing to in the outer years. So, while we do expect that we are, going to grow CapEx significantly in 2025, we feel like we have a good framework in place in terms of thinking about where the opportunities are and making sure that we have the flexibility to deploy it as makes the most sense.
Your next question comes from the line of Mark Shmulik with Bernstein. Please go ahead.
Yes, hi. Thanks for taking the question. Just as we look at the revenue guidance and the outlooks, is any color you can share in just kind of the state of the overall digital ad market? And, you've highlighted some areas where you're seeing strength, versus kind of some of the idiosyncratic efforts you've made to kind of improve the efficacy of the ad product. Thank you.
Hi, Mark. We're continuing to see healthy global advertising demand, and we're also delivering, ongoing ad performance improvements just related to all of the investments that we've continued to make over time and improving these sort of ads, targeting, ranking, delivery, all of the fundamental infrastructure there. And we expect that all of that will continue to benefit ad spend in Q3. We do expect, year-over-year growth to slow in Q3 as we are lapping, strong growth from China-based advertisers, as well as strong Reels impression growth from a year ago. And we also expect modestly larger FX headwinds in Q3 based on current rates.
Your next question comes from the line of Eric Sheridan with Goldman Sachs. Please go ahead.
Thank you so much for taking the question. I'll just ask one. You called out building community size in WhatsApp in the United States, as well as Threads. How are you thinking about those newer, faster growing elements of either messaging or Threads as a platform, and the mix between the potential for engagement growth and overall monetization longer term of either the messaging layer or Threads, and what you're most excited about there to build to sort of capitalize on scale, but bring it back towards monetization? Thank you.
I can start, and Susan can jump in if she has anything else that she wants to add. So the WhatsApp stat, I think, is really important as a business trend, just because the United States punches above its weight in terms of, it's such a large percent of our revenue. So, before, WhatsApp was sort of the leading messaging app in many countries around the world, but not in the U.S. And I think now that we're starting to make inroads into leading in the U.S., as more and more people use the product and realize that, hey, this is a really good experience. It's the best experience for cross-platform communication and groups and all these different things. I think that that's going to just mean that all of the work that we're doing to grow the business opportunity there over time is just going to have a big tailwind if the U.S. ends up being a big market. So I think that that's one reason why it's really relevant. It's obviously also personally somewhat gratifying to see, all the people around us starting to use WhatsApp. So I think that that's pretty fun, but maybe somewhat less relevant from a business perspective. Threads, I think, it's another example of something that, it got off to about as good of a start of any app that I can think of. I think it was the fastest growing app to 100 million people. And it's a good reminder that even when you have that start, the path from there to 1 billion people using an app is still multiple years. And that's our product cycle. And I think that that's something that is a little bit different about Meta in the way we build consumer products and then business around them than a lot of other companies that ship something and start selling it and making revenue from it immediately. So I think that's something that our investors and folks thinking about analyzing the business have needed to always grapple with is all these new products we ship them, and then there's a multi-year time horizon between scaling them and then scaling them into not just consumer experiences but very large businesses. But the thing that I think is just super exciting about Threads is that we've been building this company for 20 years, and there just are not that many opportunities that come around to grow a billion-person app. I mean, there are I don't know, maybe a dozen of them in the world or something, right? I mean, there are certainly more of them outside the company than inside the company, but we do pretty well. And being able to add another one to the portfolio if we execute really well on this is just really exciting to have that potential. Now, obviously, there's a ton of work between now and there, and we're almost at 200 million, so it's a really good milestone. I'm excited about that. A lot of work between this and it being a large part of the business, but I do think that these kind of opportunities are pretty rare, and that's something that we're just really excited about. I think the team is doing great work on it.
Eric, I would just add to that in terms of nearer term sources of impression growth. We really expect that video is going to remain a source of impression growth for us in the second half. On Instagram, we expect Reels to continue to drive growth, while on Facebook, we expect to grow overall video time while increasing the mix of short-form video, which creates more impression growth opportunities. And generally, we expect continued community growth across our apps.
Your next question comes from the line of Doug Anmuth with JP Morgan. Please go ahead.
Great. Thanks for taking the questions. One for Mark, one for Susan. Mark, just in terms of infrastructure and CapEx, you've talked about currently building out not just for Llama 3 and 4, but really out to 7 perhaps, and then Llama 4, 10x the compute required versus Llama 3. Just given how much you're building ahead, how does that influence the shape of the CapEx curve over a multi-year period? And then, Susan, if you could talk a little bit more about the 3Q outlook. I know you're talking about tougher comps, but at the same time, it really suggests only a point of FX neutral decel at the high end. So just curious if there's anything else you can point to more specifically that's driving the expected strength here. Thanks.
Thanks, Doug. I can go ahead and talk about both of those. So your first question was sort of about the longer term, CapEx outlook. We haven't really, shared an outlook sort of on the longer term CapEx trajectory. In part, infrastructure is a extraordinarily dynamic planning area for us right now. We're continuing to work through, what the scope of the Gen AI roadmaps, will look like over that time. Our expectation, obviously, again, is that we are going to significantly increase our investments in AI infrastructure next year, and we'll give further guidance as appropriate. But we are building, all of that CapEx again with the factors in mind that I talked about previously, thinking about, both how to build it flexibly so we can deploy to core AI and Gen AI use cases as needed. And, making sure that we both feel good about the returns that we're seeing on the core AI investments, which we're able to measure more immediately, and that we feel good about the opportunities in the Gen AI efforts. Your second question was about the Q3 revenue outlook. Again, I mentioned this earlier, we have seen healthy global advertising demand on our platform. We're delivering, ongoing ad performance improvements, which, again, we feel like is the result of many, many quarters of effort, that have accrued and will continue to accrue value to our platform. And we saw basically in Q2, where revenue grew 22%, that there was broad-based strength across regions and verticals, including particular strength among smaller advertisers, and we expect that, generally to continue into Q3.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Great. Thank you. I just want to get back to the comment on U.S. young adult user growth. especially maybe on Facebook and Instagram. I know you made a big change with Reels a couple of years ago, but what are those users doing on Facebook and Instagram? And can you give us any quantification of the usage growth? Thank you.
Thanks, Justin. So building products with young adults in mind has been a core priority area for the Facebook team in recent years, and we've been very encouraged to see these efforts translate into engagement growth. With this cohort, we've seen healthy growth in young adult app usage in the U.S. and Canada for the past several quarters, and we've seen that products like Groups and Marketplace have seen particular traction with young adults. Posting to groups in the U.S. and Canada has been growing. That's been boosted mainly by young adults. We also see that they are active users of Marketplace, which has benefited from product improvements and strong demand for secondhand products in the U.S.
Your next question comes from the line of Mark Mahaney with Evercore ISI. Please go ahead.
Yeah, I was going to ask about Marketplace, so that's a nice segue. It's a great, somewhat undermonetized or arguably very undermonetized asset. I know you indirectly monetize it, and it's a very large marketplace. It may even be bigger than eBay. Your thoughts on what you may want to do in the future in terms of monetizing it, in part maybe to even improve the quality of the marketplace? And then secondly, I just want to ask you about headcount. It's down about 1% year over year. You're pretty much back at par with where the employee headcount was prior to significant reduction. How should we think about headcount growth going forward? You talk about a significant growth in CapEx. Should we expect a moderate growth in headcount? Significant? Any thoughts on that would be helpful. Thank you.
Thanks, Mark. On your first question, about Marketplace, again, we're obviously excited that it's been one of the drivers of strength in young adults. I would probably just say that more generally, Marketplace is one prong in a broader commerce strategy that we have, which continues to be focused on basically creating the best shopping experience on our platform. Marketplace is obviously consumer-oriented. The broader part of the commerce strategy is about making it easier for businesses to advertise their products, for buyers to find and purchase relevant items on our platform. And to that end, I would say that, we feel quite happy with also the investments we've been making in Shops ads. Shops ads revenue is growing at a strong year-over-year pace. We're seeing Shops ads drive incremental performance for advertisers, and it's also working well in combination with some of our other products like Advantage Plus shopping. Your second question was about headcount. We continue to be disciplined about where we're allocating new headcount to ensure that it's really focused on our core company priorities. But we're also working down a prior hiring underrun. And as we further close that hiring underrun over the course of this year, I do expect that we will end 2024 with in-seat reported headcount that is meaningfully higher than where we ended 2023. We aren't providing sort of 2025 headcount growth expectations yet, as we haven't started our budgeting process yet. But again, I expect that we will primarily target our hiring to focus on priority areas, and we will be, running a very disciplined headcount process.
Your next question comes from the line of Youssef Squali with Truist Securities. Please go ahead.
Great. Thank you very much. So the AI assistant using Llama 3.1 has been incorporated in different variations and looks really impressive and seems to be getting closer to becoming a full search engine for virtually everything except for commercial queries so far. So are there any plans to open it up to the broader web, kind of like what maybe OpenAI is off the testing, maybe link it to third-party marketplaces for commercial search, et cetera? And then on Ray-Bans, can you maybe talk a little bit more about the opportunity to deepen your relationship with Exela Luxottica? What would that look like? What kind of areas are the most exciting to you, Mark, in that relationship? Thank you.
Yeah, so I'm very excited with how Llama 3.1 landed. I think the team there is doing really great work. Going from the first version of Llama to Llama 2 last year, there was a generation behind the frontier to now Llama 3.1, which is basically competitive and in some ways leading the other top closed models. Meta AI uses a version of Llama 3.1, as well as a bunch of other services that we've built to kind of build a cohesive product. And when I was talking before about we have the initial usage trends around Meta AI, but there's a lot more that we want to add. Things like commerce, and you can just go vertical by vertical and build out specific functionality to make it useful in all these different areas, are eventually, I think, what we're going to need to do to make this just as to fulfill the potential around just being the ideal AI assistant for people. So it's a long roadmap. I don't think that this stuff is going to get finished in the next couple of quarters or anything like that, but this is part of what's going to happen over the next few years as we build something that will, I think, just be a very widely used service. So I'm quite excited about that. And we're going to continue working on Llama too. So, I mean, you mentioned Llama, and I think the question was a little more about Meta AI, but they're both, I mean, they're related. Llama is sort of like the engine that powers the product, and it's open source, and I'm just excited about the progress that we're making on both of those. On the smart glasses, EssilorLuxottica is a great partner. We are now on the second generation of the Ray-Ban Meta glasses. They're doing well, better than I think we had expected, and we expected them to grow meaningfully from the first generation. So that's been a very positive surprise, and I think part of that is that it's just well positioned to dovetail well with the AI revolution that we're seeing and offering all kinds of new functionality there. So that was great. But EssilorLuxottica is a great company that has a lot of different products that we hope to be able to partner with to just continue building new generations of the glasses and deepen the AI products and make it better and better. I think there's a lot more to go from here, and it's compared to what we thought at this point, it's doing quite well compared to I think what it needs to be like a really leading piece of consumer electronics. I think we're still early, but all the signs are good.
Your next question comes from the line of Ron Josey with Citi. Please go ahead.
Great. Thanks for taking the question. I wanted to get back, Mark, to the comments around open source and Llama 3, and totally understand that Meta is not offering a public cloud. And so what I wanted to hear from you is maybe a little bit more on the product vision of products that come out of Llama 3 and meaning potentially offering some of these products to other companies, call it for customer service or call center offerings or other verticals. And so any insights on just how you envision maybe the open source and Llama 3.1 can sort of offer greater enterprise services for others to benefit from? Thank you.
So Llama is the foundation model that people can shape into all kind of different products. So whether it's Meta AI for ourselves, or the AI Studio, or the business agents, or like the assistant that's in the Ray-Ban glasses, like all these different things are basically products that have been built with Llama. And similarly, any developer out there is going to be able to take it and build a whole greater diversity of different things as well. Like I talked about, I think the reason why open sourcing this is so valuable for us is that we want to make sure that we have the leading infrastructure to power the consumer and business experiences that we're building. But the infrastructure, it's not just a piece of software that we can build in isolation. It really is an ecosystem with a lot of different capabilities that other developers and people are adding to the mix, whether that's new tools to distill the models into the size that you want for a custom model, or ways to fine-tune things better, or make inference more efficient, or all different other kinds of methods that we haven't even thought of yet, the silicon optimizations that the silicon companies are doing, all this stuff. It's an ecosystem. So we can't do all that ourselves. And if we built Llama and just kind of kept it within our walls, then it wouldn't actually be as valuable for us to build all the products that we're building as it's going to end up being. So I think that's the business strategy around that. And that's why we don't feel like we need to necessarily build a cloud and sell it directly in order for it to be a really positive business strategy for us. And part of what we're doing is working closely with AWS. I think especially did great work for this release. Other companies like Databricks, NVIDIA, of course, other big players like Microsoft with Azure and Google Cloud. They're all supporting this, and we want developers to be able to get it anywhere. I think that's one of the advantages of an open source model like Llama is It's not like you're locked into one cloud that offers that model. Whether it's Microsoft with OpenAI or Google with Gemini or whatever it is. You can take this and use it everywhere, and we want to encourage that. So I'm quite excited about that. The enterprise and business applications that we're going to be most focused on, though, in addition to just optimizing the advertiser experience, like I talked about in my comments earlier, it is the business agent piece. It's I just think that there's a huge potential. Like I said earlier, I think pretty much every business today, it has an email address, they have a website, they have social media accounts. I think in the future they're going to have at least one, if not multiple, business agents that can do the whole range of things, from interacting to help people buy things to helping support the sales that they've done, if they have issues with the products, if they need to get in touch with you for something. And we already see people interacting with businesses over messaging working quite well in countries that have low cost of labor. But the thing is that in order to have someone answering everyone's questions is quite expensive in a lot of countries. And I think that this is like a thing that AI, I think, is just going to be very well suited towards doing. And when we can make that easy for the hundreds of millions of businesses that use our platforms to pull in all their information and their catalogs and their history and all the content that they've shared and really just quickly stand up an agent, I think that's going to be awesome. So, we can combine Llama with a lot of custom work that we're doing on our business teams and couple that with all the other investment that the rest of the ecosystem is doing to make Llama good. And I think that's going to be huge. But that's just one area. I mean, this really goes across all of the different products that we're building, both consumer and business. So it's a lot of exciting stuff.
Krista, we have time for one last question.
Thank you. That question will come from the line of Ross Sandler with Barclays. Please go ahead.
Great. Mark, so on Monday in your interview with Jensen, you said something along the lines of if scaling ended up stopping one day, you'd have 5 years of product work to do and ahead of you. So outside of agents or AI assistants, what other areas in AI are you thinking about or looking at in that 5-year roadmap? And then the second question is maybe one more stab at the capacity question. You guys said that Llama 3 the 3.1 was trained on 16,000 H100s. You've also said that you're going to have 600,000 available by year end. So even if we kind of go up to 160,000 GPUs for Llama 4, we have plenty of extra capacity for inference and future products. I guess, how are you guys modeling out this entire kind of CapEx roadmap between training, inference, and future things? That's all. Thanks a lot.
I can start with the first one, and then I'll let Susan answer the second one. It's an interesting question. It's a little hypothetical because I do think it's true that if, let's say, there were no future foundation models, I think there would just be a huge amount of product innovation that the industry would bring to bear, and that just takes time. But then at the same time, there are going to be future foundation models, and they're going to be awesome and unlock new capabilities, and we're planning our products around those. So I'm not really planning our product roadmap assuming that there isn't future innovation. To the contrary, we are planning what's going to be in Llama 4 and Llama 5 and beyond, based on what capabilities we think are going to be most important for the roadmap that I just laid out. For having the breadth of utility that you're going to need in something like Meta AI, making it so that businesses and creators and individuals can stand up any kind of AI agents that they want, that you're going to have these kind of real-time multimodal glasses with you all the time that will just be increasingly useful for all the things that you're doing. And that, I guess this kind of dovetails with what I'd expect Susan to talk about next. And we do have this huge set of use cases already about people wanting to discover content and interact with their friends, and businesses reaching people, and all that stuff is getting better with this too. So there's I guess my point there was, it's just there's some lag between a technology becoming available and the products becoming kind of fully explored in the space. And I just think that was kind of my way of saying that I think that this is just a very exciting area where there's just going to be a lot of innovation for a long time to come. I'll let Susan take a stab at the numbers around the GPUs and all that.
Thank you. We are clearly, in the process of building out a lot of capacity, and Mark, has alluded to that in his comments about, what we have needed to train prior generations and the next generation of Llama. We are, and that's driving sort of what we've talked about in terms of the significant growth in CapEx in 2025. And we aren't really, in the position now to share a longer term outlook. When we think about sort of any given new data center project that we're constructing, we think about how we will use it over the life of the data center. We think about the amount of capacity we would use in terms of training whatever the subsequent generations of Llama are, and it's architected around that. But then we also look at how, we might use it, several years into its lifetime towards other use cases across our core business, across what we think might be future needs for inference for generative AI-based products. So there's sort of a whole host of use cases for the life of any individual data center, ranging from Gen AI training at its outset to potentially supporting Gen AI inference to being, used for core ads and content ranking and recommendation, and also thinking through the implications too of what kinds of servers we might use to support those different types of use cases. So, we are really mapping across a wide range of potential use cases when we undertake any given project. And, we're really doing that with both a long time horizon in mind, again, because of the long lead times in spinning up data centers, but also recognizing that there are multiple decision points in the lifetime of each data center in terms of thinking through when to order servers and, what servers to order and, what you'll put them towards. And that gives us flexibility to make the sort of best decisions based on the information we have in the future.
Great. Thank you all for joining us today. We appreciate your time, and we look forward to speaking with you again soon.
This concludes today's conference call. Thank you for your participation, and you may now disconnect.
Boom. Now my mic's on. So what'd you think? That was the Meta conference call. They certainly talked a lot about AI and AI agents. They did mention Chinese ads on their app, on their platform. I thought that was interesting. But yeah, we're going to take a look at some charts now because it's the end of the month, which sets up for some interesting things to watch, some risk ranges to look at for the month of August, and maybe even some guidance for where things may be headed for the rest of the year. So let's start with Meta since we were just talking about it. Meta is ending with an outside month, which means we have an instant broadening formation. You take last month's low compared to this month's low, you see a downtrend. Last month's high compared to this high, you see an uptrend. This is what in the strat they call a 3-bar, an outside bar, because it did not stay within that range. We saw an inside month and up, followed by an outside month. So the levels to watch next month for Meta would be this month's high of 542 and 81 cents and the low of 442 and 65 cents. It would be a buy signal above, a sell signal below, and those are just areas to watch because that's where computer stop orders are going to be and where short selling buy orders are going to be. Because at this point, if it breaks out above 542 and 81 cents, everyone who's ever shorted the stock will be losing money. So you want to know who's in control. Meta has had a huge comeback in recent years. It was as low as $100 a share, and it's now above 500. It was a solid quarter. They really do seem to be eating Elon Musk's Twitter's lunch. Everyone is throwing money on Facebook. They mentioned some stuff about how they're implementing their new video carousel on Facebook. I think that's going to be interesting to watch. It seems like Reels are less of a focus for them. 16:9 content does pretty well on Facebook. They did mention like younger users are coming to the platform. I don't understand that, but they have the data, so maybe it's true. But yeah, we're going to start looking at some other charts here. Yep, sorry. I know you couldn't hear me. I'm bad at streaming. Look, but you know, eventually I'll figure it out. One of these days. So yeah, let's take a look at some charts. I haven't really been paying attention to these, so it's going to be on the fly technical analysis that you're going to be watching here. Apple has not had an inside month in a while. Let's see how it ends the quarter. That's the other thing. We can look at quarters. So with Apple, you had an outside quarter, followed by an inside quarter, followed by a breakout of that range. And then it hit as high as 237 during this quarter. I want to say it was earlier this month. Yeah. No real reason to be bullish or bearish of Apple on the stock chart. And then, yeah, you have a yearly stock that's also running. There is no reason to get short Apple unless you are looking at the fundamentals, which we're just looking at the chart here. Another stock that just reported yesterday, AMD, here's their monthly. That's an outside bar. So you have an inside month followed by an outside month. So now we have a new risk range to pay attention to. There's your downtrend. There's your uptrend. It's a pretty wide range, so it would be a buy signal above 187.28 and a sell signal below 134.05, which I think was reached just yesterday. Yeah, you could have bought it for quite a little bit there, or, you know, a discount to its recent highs. And yeah, once again, you're talking about a stock that could at least attempt to go back to its all-time highs that we saw back in March. AMD makes CPUs, GPUs, and they also make server rack stuff and AI compute devices as well. So AMD had a great quarter. The stock did kind of sell off a bit. It hit a high today of 153.60 and closed at 145.23. It looks like some people took some profits, basically. Which, you know, congratulations if you got in on that trade. Amazon reports tomorrow. So we can look at the monthly chart, but we know that there's a catalyst tomorrow. So I don't want to read too much into it. Nothing really there on the monthly chart from a signal perspective. We are towards the highs of this stock. So if they don't have great things to say, or if they miss on any metric, I do think it's susceptible to a sell-off of some kind. But we just heard Mark Zuckerberg say that they are paying AWS for the cloud portion of their AI compute. So all roads do kind of lead to AWS on the internet, although there's Azure at Microsoft and Google has their cloud services too. But it's very much an oligopoly. It's not like there's a whole lot of companies that are in that space that can disrupt AWS. AWS by itself would be a Fortune 100 company. So we're going to pay attention to those results tomorrow. I don't really have much else to say, although it is very close to its all-time highs, and I would just be wary because it's not necessarily cheap. They do have an outsized revenue story at that company, though. They make a lot of money in sales. They don't always translate to earnings, so we'll just have to wait and see. Tune into Shacknews Twitch tomorrow, I believe, or YouTube. We'll be streaming Amazon's conference call, and then, of course, you can just go to shacknews.com to read about all of this as we write some of the most truthful articles you will see about financial news. We're not trying to predict what happens. We just let you know what happens when it happens. Another company that reported today, ARM Holdings. Let's look at this chart after hours, because this is a story about reading the press release. If you read the headline, they beat. ARM beat the earnings and revenue expectations for the quarter. but then they turned around and provided guidance that was below expectations. So analysts were expecting 27 cents per share of earnings next quarter. They guided to 23 to 27. So that means the midpoint's at 25. So that's a disappointment. So even though they beat, and they actually did quite well, their guidance disappointed. And it may say something about the demand for smartphones right now, because they are kind of at the heart of that. I did find it impressive that their gross margin during the quarter was 97%, because they are a fabless company that licenses their chip architecture to other companies. But yeah, ARM Holdings reported today. That's why the stock is down. It's not because of the earnings results. It's because of the guidance. And that's an important lesson for folks out there, is that sometimes you can beat expectations and it still isn't enough. And this is one of those examples. They also announced that they're not going to disclose how many chips were manufactured with their tech anymore. So this is kind of less information, and Wall Street hates that. You can look back to when Apple stopped talking about how many iPhone units they sold, and now a few years later, we are in a multi-year decline in iPhone sales, even after price increases. So these companies can be kind of shady with stuff like that. I'm going to stay on the tech tip right now, and then maybe we can jump around sectors. Corsair. Woof. What is that? That is a weird-ass bar. Anyway. This is terrible looking stock. Holy crap, is this a bad looking chart? They're not a bad company, but their chart looks god awful. This is the company that owns Elgato, Origin PC, several other brands. They're pretty well known in the space. They're trading for $883 million right now. That is still above book value, but it's at a discount to their sales. They're trading at 0.6 times sales. They don't have earnings because they're losing money. So the price to book analysis is not really ideal. You're talking about a company with $230 million of debt, $130 million of cash. So they're not at any risk of going bankrupt. The short interest has dropped materially. It's only 5% shorted now. And 81% of the stock is held by institutions. Times are tough for Corsair. Used to own the stock, got out of it. Thank God. It's been a multi-year issue for them. I think they're one of those stocks, like they went public on the back of their really solid 2020 results, and it's kind of been a multi-year decline since then, which is unfortunate if you've been a shareholder the whole time. But I just wanted to draw attention to it because it's certainly cheaper than it's ever been. I don't know if that means anything about the future of the stock, but it's certainly lower than it has been. Let's see, moving on. We have, let's look at the quarterly chart real quick for Corsair. That's an awful looking chart. Doesn't matter what time frame. It doesn't matter. I absolutely love Corsair too, Sam. The computer I'm talking to you on right now, the case is Corsair. I believe the RAM is Corsair. My other tower over there, also Corsair. I think Corsair makes great products, and I think Elgato makes good products. They just are. They are a victim of their past success. But at some point, you want to think that demand for their products will level out. I kind of think GameStop should buy them. With their $4 billion in cash. This is less than $1 billion. It'd be better than doing nothing with the cash. I'm fixated on this stock. Denny's had an inside quarter, so maybe the bloodletting is over. Probably not. But the range to watch for next quarter would be a breakout above $7.70 a share, or more likely, just based on how things have been going for them, a breakdown below $6.41 a share would give you a quarterly sell signal. So that'd be the next 3 months. Something to pay attention to. Yeah, it's not looking good for Denny's. And I absolutely love Denny's. We are inside of the death of Denny's bar, as I call it. This was the month of March 2020, where the stock fell from $17.74 all the way down to $4.50. I don't know where this is headed, but I think it would be a travesty if such a great American institution like Denny's were to go bankrupt, but it wouldn't surprise me. EA, they just reported yesterday. They're well within our coverage space. Monthly chart, it looks like we're about to break out here. 151.26 was the high, the previous all-time high. It hit a high today of 153.51. It did pull back within that range, so we are at risk of a slightly higher high and then maybe a retest down here before it can break out. But it has been churning around for like 1, 2, 3, 4, 5, 6, 7 years. So this is 7 years of churn that could finally resolve in a breakout to the upside. We got news yesterday that 5 million people played EA Sports College Football in the first week. So, and they don't seem to think that there's going to be Madden cannibalization. So I do think next quarter might be pretty good for EA, and the chart seems to reflect that. You had it has not been able to stay inside for a while here, but you did have a rev strat to the upside, but it didn't really go. It did eventually get above that. But yeah, we're talking quarters here. It's been a rough 4 years. If you've been long this stock, it's been a rough 4 years. So we'll see if that's just a slightly higher high and we puke back down lower. I don't think so based on what they had to say. It seems like EA Sports Football Club is doing well. The soccer game. Madden is still a huge franchise. And yeah, EA Sports College Football is the best football simulator that EA has made in over a decade. So yeah, I think times are going pretty well over there at EA. The problem, Sam, to your point, the EA Sports College Football data, the sales are not going to show up until the next quarter. So we got to hear about early performance, but we didn't hear, here's what the effect is. And next quarter, I believe we'll be able to hear how Madden and EA College Football 25 sold. So stay tuned. And it could be a couple of months of churn before it breaks out, but I would just keep my eye on EA here. They seem to have gotten their stuff together. And yeah, it was a solid quarter on their part. They beat their internal expectations for sales. They beat Wall Street's expectations for earnings. I'm going to take a look at the yen, mainly because I'm a Nintendo shareholder. The yen may be bottoming against the dollar here. The Federal Reserve, Travis and Taylor Swift Madden cover athletes, I don't know about that. They've already announced the cover athletes black belt scrub, but I appreciate the suggestion. I think that would be cool. I think they would sell a lot if they had a Taylor Swift edition, but there would also be some backlash because football fans, you know. Anyway, I don't think they need to do that. College football is selling truck tons. But yeah, it looks like the yen may be bottoming, but I don't know. It's been a rough few years for the yen. But you know, outside month, you want to watch a breakout in the FXY above 61.78 or a break down below 57.17. But with the Federal Reserve saying that they're going to cut rates, or they're more likely to cut rates in September than they have been, that could lead to some dollar weakness, which would beget yen strength. The other thing that happens with the yen is when people are taking risk, it tends to sell off. When people are risk averse, it tends to be something that gains value because people go to cash or deflation starts to appear. Currencies gain value in that environment. So I do think there are some reasons to believe that the yen may strengthen here in the next year. But to my earlier point, the yen has been in a ruthless bear market basically since 2012 with a couple of rallies that have failed. So you had a high, you had all-time high, lower high, slightly higher high, followed by a lower high, and then a breakdown below the previous lower low. So now maybe that's the rock bottom for the yen. We'll have to wait and see. I do think it's important to look at these currencies, though. I don't really have much to say about the euro, but there's the euro chart. It looks like it's already bottomed and is consolidating, or it's consolidating, getting ready for another break down below. But it's basically at parity with the US dollar. I guess all things being equal, if the U.S. accommodates more than Europe, the euro could strengthen, but I am not so sure that's going to happen because parts of Europe are already showing recessionary data. I believe Germany, which is one of the largest members of the Euro Union, the European Union. So yeah, that's the yen and the euro quick look. Hey, remember when I bought a GoPro last episode? It's up. Not a lot, but I am making some money off of it. I can, let's see, where is it? I'm just going to pull up my own holdings. You can't see them, unless you look at the reflections in my glasses, I guess. I bought GoPro for $1.38. It's currently trading for $1.55. That's a nice 13% gain. And it's a small position. It was a speculative position. There are really no technical reasons to be too excited about it. It had an inside weekend up buy signal. It hasn't given up those gains. On the monthly chart, not a whole lot to write home about. It did have an inside quarter. So we have a range to watch for next quarter. A breakout above the high of the quarterly high of $1.76 would be a buy signal, and a break down below 132 per share would be a sell signal. Man, how neat would it be if I almost bottom ticked this stock because it's at I own it at $1.38 and the all-time low is $1.28. Anyway, interesting company if it gets acquired or if they can turn it around themselves. It's obviously been a world of pain for shareholders for a very long time. You're talking about a stock that was almost $100 a share 10 years ago, and it's now trading for $1.52. So at the very least, I'm buying it. I bought it closer to the low than I did the high, but we'll see what happens on that front. Let's take a look at IBM. IBM had an inside quarter and up, but then it came back within the range. So now you have a potential reversal strat to the downside because it tried to break out of equilibrium and then went back inside. So what we have to watch for the next quarter in IBM will be a breakout above $196.26, which was the quarterly high, and a breakdown below 173.38, which could lead to a world of pain. So that's your signal there. They had a decent quarter when they reported last week. Everybody's favorite dying semiconductor company, Intel. Intel has a rev strat month cooking. You have here's the first month, here's the second month where it traded inside of it, and then it tried to break out, and that breakout failed miserably. So we have a sell signal below $30 on Intel. I would not be surprised if that happens. Intel has been doing a terrible job for years, and that can be seen. That would be a monthly sell signal, so that would only really be useful for the next month, but August hasn't started. That's why we're doing this today, so that you have some risk ranges to pay attention to for the next month, in some case for the next quarter. But yeah, actually, sorry. I shouldn't be looking at quarterly charts, absolutely, because we are in the third quarter. Sorry. Anyway. Time frame continuity is something I'm paying attention to, but we have to look at full bars. So I'm going to focus more on monthly charts going forward for the rest of the stream. Another garbage stock that I own is iRobot. We're talking about inside, has not traded inside month. It is currently inside quarter, but there are 2 months left in the quarter. So we'll see what happens. No reason to be a hero in this stock right now. IYT, the transportation index, is something people like to pay attention to. On the monthly chart, you had a you had inside month and up. So you want a continuation above $69 per share of the ETF. And just watch you're going to want to pay attention to like $65.43. If it breaks down below that, things can get weird. People like to pay attention to the transportation index because they think it is a leading indicator for where the economy is going. And as you can see, it's been churning around here. It's a wide range, but it's been churning around a very wide range for the last 4 years. If it doesn't break out, that does not bode well for the future of the U.S. economy and the global economy at that. I skipped over Google. Let's go back there. Google had an outside month. So that's very simple. You have a new broadening formation that was born here. It is a sell below 164 and 6 cents. It's a buy above 191.75. Their earnings weren't terrible. They missed on the YouTube ad revenue number, and they made similar comments about AI and the monetization of it not really materializing as fast as people would like. That's a trend that we've heard on these conference calls. Microsoft said it, Facebook said it, Google said it. They're spending on AI. They're buying up data center land and building data centers. All that costs money, and they don't know when they're going to make money off generative AI. That's been a trend on these calls this quarter, and I think it may become a trend going forward. But, there's going to be some people that make money off of AI. I got ahead of myself. Here's GameStop. Terrible company. It is set up for a RevStrat month to the upside, though. So what we're going to watch next month, a sell signal below the monthly low of $22.31. And if by some miracle it gets above $29.79, that would be a buy signal that would be valid for the next month. We're still inside of this mother bar from May, where it traded in a range from $10.70 all the way up to $64.83. Traded inside of that range. Did not trade inside of that range, but did close back inside of it. So we're going to see where things go, but that's your risk range for GameStop. On a personal level, I have been considering selling GameStop and putting it into another company that I think may have a better future. The comments from the CEO notwithstanding, I am tired of Ryan Cohen. I think he has screwed us over multiple times. And his arrogance is off-putting. And the way that he talks is not becoming of a good CEO. Anyway, moving on. I already talked about iRobot, the transports. We already talked about Meta. Here's Meta's chart still. Outside month. See, below 442 and 65 cents would be a sell signal. Above 542 and 81 cents would be a buy signal. But that is a $100 price range. It's entirely possible that the stock stays inside of that range next month. Stay tuned. Yeah, we can look at the Microsoft chart. Microsoft has not been able to find equilibrium. Yep, not on any chart. I do want to point out just the massive run that this stock has had. You had an inside year and up that actually saw continuation all the way up to 468.35 cents per share. They just said it could take 15 years for their investments in AI to pay off. So I don't know why you would own this stock. I guess if you like Office 365 or Azure or Teams, or you think Xbox is going to turn it around, maybe those are reasons to own the stock. But out of all these companies, this is the one where I'm like, they might be in for some pain. Because it's been, like, look at this run that stock is on. This is the year 2000. But, like, if you look at the run since 2009, you're talking about a stock that was $16 that is now $418. And yeah, this chart's ugly. This is a very bad looking chart. It had inside week and down and down and down. We'll see if this latest weekly bar can turn things around, but there is no sign that Microsoft selling has stopped. And on the monthly chart, it didn't go outside month. It's just a 2, but it did reverse back in after this uptrend had been broken. So yeah, we'll see what happens on the Microsoft front. They are executing extremely poorly, in my opinion, on a lot of fronts. The Xbox division is not doing well. I think that they are investing heavily in AI, and we have not seen it turn around. They also bought back their stock during the quarter. $8.4 billion of stock was bought during the quarter, which could be maybe all-time high valuations. someone asked me where I thought it could go in the long run. I think if they execute flawlessly, I think Microsoft may be able to get to 600 a share, but at 418, I don't find that risk reward to be that compelling, especially because it could take years for that to happen. Yeah, that's the Microsoft chart. They actually recovered quite a bit of their losses. It was trading below 300, or sorry, it was trading below 400 in after hours last night. It did not get down that low. I think people came to grips with what they had to say about AI. Netflix had a quarter. You have an outside month in Netflix to the downside, so you have a broadening formation here. Low, the breakdown below 617 would be a sell signal. Above 697.49 would be a buy signal. They seem to be executing pretty well, but we are coming up against the previous all-time high, and you see how fast it sold off and how long it took to get back here. It's troubling. If you don't see a breakout here in the next few months, that could be trouble for Netflix. You'll notice I'm not talking about fundamentals here really at all. This is more about what these charts look like going into the next month. Hey, it's my largest holding. It's me, Nintendo. Nintendo had an outside month. Whoa. I heard something really loud out there. It might have just been a delivery truck or something, but somebody dropped something. So yeah, you had outside month to the upside, but it reversed back into it, and then it couldn't. I don't think Nintendo knows what it's doing. The stock, not the company. Nothing really. You had an inside quarter and up buy signal at the end of last year. I had mentioned that previously, and now we're just kind of waiting. We're all waiting to hear what the Nintendo Switch 2 is going to have in it, basically. Yeah, no technical reason to buy the stock. Nintendo is reporting this week on Thursday night in America, so we will get some data from them, which is always interesting. But they are habitual sandbaggers and very conservative at giving guidance, so people may go into it thinking, oh, we're going to get some guidance increases. I wouldn't hold my breath. Although you look at like what we knew before their last earnings versus what we know now. Before the last Nintendo earnings, we did not know that there was a new Zelda game coming out. We didn't know that Mario and Luigi Brothership existed. We didn't know that there was a new Super Mario Party Jamboree coming. We didn't know that the Nintendo World Championships were coming. But none of these games are. We'll see. We'll see, right? We'll just see. And hey, we got a Metroid Prime 4 trailer. But I don't know if any of these software titles are going to move the needle. And it's important to note that we are lapping the release of Tears of the Kingdom. There's nothing in their pipeline this year that compares to Tears of the Kingdom. And they have already previously guided for a 40% drop in earnings this year. So just food for thought going into their earnings. I would wait to hear what they have to say before you make a purchasing or selling decision. But yeah, Nintendo reports today. I'll talk about Nintendo because we did get some questions about it too. So after I'm done looking at these charts, I'm going to mention a couple of stocks that we had some questions about. Nvidia's chart, they had a 10-for-1 split, so we're talking about a $120 stock now. Still inside quarter, so you want to look at a breakout above 140.76. They do report earnings at the end of August. I believe it's the 28th. They're going to report earnings. And their stock sold off with the broader market. You're talking about a stock that was 140.76 in June. On June 20th, it hit a low of 102.54 yesterday. That's a pretty massive sell-off. That's almost 30%. So that's, in my opinion, it's a correction, not the beginning of a bear market. But like I said, that's just my opinion. We'll have to see what happens. But right now, it has some work to do to get back in the good graces of momentum traders. Because it really was going parabolic there. So the question is, can it resume its parabolic move, or is this the end? Based on what we've been hearing, I don't think it's the end. Other interesting thing to note about NVIDIA on their next quarter is we want to listen to them about their gaming segment, because they may tip Nintendo's hand for them, where if they're like, hey, we got a big order for Tegras this quarter, that might imply that Nintendo is getting to work on building the next, Switch 2. So we're going to want to pay attention to NVIDIA, not just for the AI stuff, not just for the GPU stuff, not just for the cloud computing stuff, but also, like, I want to know, when is Nintendo going to start building this thing? And when are we going to see it? That is a bit of detective work there. Another company that reported today, Qualcomm, red on the month? Wow, they've given up all... What happened? What happened on their conference call? Something had to have happened on that conference call, because this stock was up 195 earlier. It has now given up all of the gains. I'm really curious. What on earth happened to Qualcomm after hours? Let me see if I can find anything on the internet about this. I can't find any reason why this happened, but I have to assume it was from the conference call. They must have said something. But that is very strange. Anyway, let's take a look at their longer term charts. The monthly does not look good now. It's not good. It was looking better earlier. I guess we'll have to see what happens tomorrow morning for this stock. Yeah, that's a hell of a reversal that happened in after hours. That's usually a CFO or CEO saying something, but that is not great. I obviously can't find anything on Twitter because that platform's completely worthless. It's not their guidance. The guidance is solid too. That's weird. Sorry, I can't really explain it. I don't know what's going on there. We were listening to the Facebook Meta conference call instead. There was something like 400 some companies reported today, so we did our best. While I'm here, let's take a look at the Qs. This is the NASDAQ 100. This is the 100 most beloved tech companies in Starbucks for some reason. Just a 2-month. Quarter still developing there. We did see a pretty big sell-off in the NASDAQ the last few weeks. There was some saber rattling from presidential candidate Donald Trump about what he would do with Taiwan, making them defend themselves. Most chips are made in Taiwan by Taiwan Semiconductor. So that was a bit of a concern. I do just want to zoom out to show people where we're at in the history of the NASDAQ. You see this sell-off here? This thing? That's the tech bubble. The one from the 90s and early 2000s, right? This is what we're doing now. It's orders of magnitude much larger. And we are seeing companies like Microsoft, like Facebook, who are saying that we're going to keep spending on AI, even if it doesn't make us money. That's going to lead to less profitability and worse cash flows, which will lead to lower share prices. And when they are some of the largest weighted stocks in this index, it could spell pain for the Qs. So I don't know. If you own the Qs, congratulations, you've made a lot of money, except in the last month. But I don't know. I would stay away. But whatever. Do your own due diligence. Take a look at this Reddit stock here. It doesn't really seem to have any direction yet. Did hit an all-time high this month. Shorter term time horizons, maybe there's something here, but I don't know. There is a downtrend in place, but there's also an uptrend, so we'll see what happens. But you got your broadening formation right there. Another company we cover, Rivian. No, not a whole lot to look at in this chart. Sorry. Snapchat. Did Snap report earnings today? Or are they just going up on Facebook earnings? Yeah, they haven't even reported yet. That's pretty wild, right? That they can go up 6% on Facebook's results. Because Facebook, like, is such an interesting read on advertising spend on the internet that you can extrapolate to other platforms. But honestly, if the stock market's open, it's probably a good day to be selling Snapchat stock. It's been a struggle bus central over the long period. Poof. I'll take, what's the worst tech chart I have in my book for 400, Alex? This is ugly. This is not a good looking chart. Let's look at the granddaddy of them all, the S&P 500. Looks kind of similar to the NASDAQ 100 here. No inside month here. Hit an all-time high during the quarter still. So we're dealing with things that are at the highs so they can go higher. Momentum investors are just watching previous all-time highs. So if the S&P gets above 56, 69, 67 cents, the algorithms are going to pile in and start buying it. Yeah. Oh man, Teladoc's in Turd Town. They must have reported earnings. This is another stock that I own. Yeah. Same thing though. You look at the long-term chart of the S&P 500 and you think back to like, oh man, that 2008 recession was crazy. This is it right here. We have really, really, really run since then. But just because things are higher doesn't mean I'm telling you to sell them. I'm just saying, let's give ourselves a frame of reference as to where things are coming from. But yeah, I do want to talk about Teladoc. Here's another god-awful chart. No reason to buy it technically. It's hitting new lows. Yeah, we're talking about stock that's sitting at all-time lows right now. $8.12 a share. It hit as high as $308 back in 2021 while the lockdown was still going on. So yeah, pretty wild. They just reported a terrible quarter. Their stock is down. And that's what happens. This is what happens when you post bad results. But I do think telemedicine is interesting as a long-term thing. But yeah, times are tough for them. I did add TKO to my list. This is the company that owns the UFC and WWE. They've really been in an interesting time period. Yeah, inside week and down, inside week and reversal. Potential rev strat for next week. So you want to watch below 104.76. Maybe people sell it off on the back of SummerSlam disappointing. But how could SummerSlam disappoint? It's going to be in Cleveland. But yeah, looking at the monthly chart, it has a rev strat. So yeah, you want to watch below 104.02 for all of August. That would be a sell signal. And we'll see if we can get out of this. But yeah, you could drop below 95 a share pretty easily here. If bad news shows up, or if just the broader market sells off. I think TKO has kind of had a nice run. They've been doing very well on the back of a lot of WWE momentum. The Rock joined the board of directors. Vince McMahon is gone. Cody Rhodes finished his story. UFC continues to do things. So yeah, it's a interesting stock. Thought I'd mention it here. Oh boy, let's talk about Tesla. Tesla had an inside month and up continuation this month, so it tried to get above this downtrend. It's kind of above the downtrend right now. So we'll see what happens. This downtrend's been in place for a while. We did see it get above it. So we'll see. Does this downtrend now serve as support, or will Tesla break down? We don't really have any. We have an inside week that is cooking right now. The week's not over yet, but we do have nothing on the monthly chart to give us really any idea what's going to happen. But we are near this downtrend, so I would say watch for a break below 217, and next month below 198. I think a world of pain could await Tesla shareholders, because nothing about that conference call last week was good. Even if you're an Elon Musk sycophant, maybe it was, but outside of that, it was a pretty terrible quarter for Tesla. They delivered less vehicles, they produced less vehicles, but we're not going to talk about fundamental results here. We're going to talk about technicals. Taiwan Semiconductor existing. They already reported earnings. Yeah, the Donald Trump saber rattling has definitely shook some people out of this stock. If you believe that he's going to win, or if you believe that no matter what, there's going to be some sort of conflict with China in that area, that's the risk of holding it. It is cooking up an inside week, but we'll have to wait till the end of the week to see what happens there. But yeah, no real signals to call out. Interesting stock, though, very important to the broader tech story. Another video game stock, Take-Two Interactive. Full disclosure, I am short this stock, and I am losing money on it. But yeah, it's been churn city for a while here. Everyone's waiting for GTA, basically. And they may be waiting for a while. It is cooking up an inside quarter, but that's obviously still has 2 months left in it. The monthly chart doesn't look great. Wasn't able to... We've seen... Here's the high, right? All-time high, lower high, lower high, lower high. So we are experiencing... There is a case of a downtrend that may be appearing here. We'll have to watch. If it gets above 160, it'll probably negate that, but we do have a downtrend to be paying attention to. In Take-Two. And it could... I don't know. If you pay attention to Take-Two over the years, they tend to delay games. So if GTA gets delayed, I think that might lead to a sell-off in the stock, but we'll have to wait and see. Unity. You want to talk about a turd? Let's look at Unity. Woof. Inside quarter and down, and now it's just kind of floundering there at around $16 a share. They made a pretty big bet on Apple Vision Pro, and boy howdy did that not pay off. So we'll see. And they've made a bunch of other really stupid decisions. John Riccitiello's now out as CEO. I think they have a new permanent CEO in place. We'll be reporting on their earnings when they drop, so keep it locked on Shacknews. I don't really have anything to say about it now, other than just it's at its all-time lows. So it's definitely cheaper than it ever has been, but I don't know if I would buy it. There's no evidence on the chart to want to take that risk and be a hero. I don't want you to be the first person to run into a burning building. And it is important to note that we have a yearly sell signal here below 2220. So it traded inside year, and then it went down below that. So it broke down below 22. Yeah, it hit 2220 right on the nose in November of last year. It broke down below that in May of this year. It has not looked back since. So that's another one to pay attention to. Let's take a look at the volatility index. This is actually very concerning to me. You have an inside month followed by a massive outside month, which means you have a broadening formation here. The low of the VIX, where you would sell the VIX, which means you would take more risk, would be below 1062. A breakout to the highs would be a VIX above 1936. And obviously you could trade inside of that in August as well, but that's not good. We'll see what happens in the future. But those are your risk ranges to watch on the VIX. In times of panic, the VIX can get as high as 85. I believe in 1987, it hit as high as 172.79 during the great crash of the 87. So down here at 16, it's not really that high. And boy, howdy, have we got a lot of uncertainty right now. We don't know who's going to be the president. We don't even know who's going to be the vice presidential nominee for the Democrats yet. We don't know when Taylor Swift will endorse Kamala Harris or if she won't. The reason I bring up politics here is that the election cycle has a lot to do with how the market views risk. And uncertainty begets volatility. So this is a stock to watch. Inside month, followed by an outside month. That means that we're breaking out of equilibrium. We even broke out of that mother bar. So yeah, those are risk ranges for that. I would just keep an eye on it. And let's see. I just like looking at US Steel's chart. But yeah, nothing there. So that's the charts. Hope that was interesting, at least to you folks. I use a strategy that was taught to me by Rob Smith, who passed away exactly a year ago this month. So shout out to my mentor, Rob Smith, who created the strat. You can just look on Twitter at #thestrat, and people will be tweeting about three things. Time frame continuity, where you want to buy stocks that are going up on all time frame. You want to be short stocks that are going down on all time frames. The broadening formation, that concept of the outside bar, that stocks don't trade with horizontal supports and horizontal resistances. They trade in a series of uptrends and downtrends across all time frames. And then, yeah, the third rule of the strat is looking for actionable signals. So equilibrium breaks or the lack of equilibrium. They're all interconnected. You can watch these on all different time frames. You saw me jumping between weekly, daily, quarterly, monthly on this session. But yeah, you can look at these on any time frame. You can trade on any time frame with the strat. But it's important to note that time frame continuity helps you, because it's like I said with I think Meta is a good example. Sorry, let me put my chart back up here. Slides. So if you look at Meta, I'll take off the drawings here. Basically, everybody who's been short this stock, except for this, like if you shorted it in July, you're still making money. And yeah, I guess if you shorted it in April, you're making a little bit money. But basically, everyone else in the history of time who's short Meta right now is losing money. It's up on the week. Sorry, we'll go. It's up on the day. It's up on the week. It's up on the month. Barely. It's up on the quarter. Barely. And it's up handily on the year. So when this stock is running, you're going to see a lot of momentum players jump into it because it has time frame continuity to the upside. So everyone, you have green bars across all these different time frames. The computers see that. It's important to note, I'll note this in every episode for the folks at home. 90 to 95% of stock trading volume every given day is done by high frequency trading computers that are plugged into the stock market, that are run by hedge funds, that are run by market makers and broker dealers. And those are rules-based computerized trading. So once you can teach yourself the rules, you can know why a stock is selling off even if there isn't news. It's why I value technical analysis in the modern day. Even though I am an accountant and I have a background in fundamental analysis of companies, I find that you have to pay attention to technical analysis. But so many people value moving average, convergence, divergence, MACD, or they moving averages, or golden crosses, or all these magical lines. My point about all that stuff is a moving average is backwards looking. It tells you what's already happened. There's no predictive nature to any of that stuff. And I think people try to assign support and resistance to those things. But you can draw broadening formations and you can see, okay, this is actually how it works. But not horizontal support and resistance. It's a series of uptrends and downtrends. Sorry, let me switch back. But yeah, that's the meta chart again. And you can see when you do break out of a downtrend, you can run. And that's why they're not set in stone. That's why I said they trade in a series of these. They can become support after they were resistance even. So a lot of the rules that people have regarding investing and using stock charts to trade, they may apply, but one thing that I can tell you for certain is, like, here's a good example right here. On this day, Meta traded inside of the previous day's range. And then that next day, it went above that and it went up. That's an equilibrium break. You can't deny that. That is not sorcery. I'm not making any conjecture there. I'm stating a fact. And that's what I think is so powerful about the strat. It's based in fact. It's based in truth. This happened. So this is why this is happening. We're never going to predict anything. That's why when I tell you, here's the risk range, here's what will happen if it drops below this price, here's what will happen if it goes above that price. It's important to note. So yeah, we did have some questions from the chatty that I wanted to address before I end the stream. I'm going to probably end here in about 6 minutes or so because I want to go get dinner. RMS asked about AVGO and NVIDIA tanking yesterday and what a difference a day makes, right? Both these stocks are running today. Avago, also known as Broadcom, up about 13% today on the back of the AMD news. AMD stock was up about 5% today, and NVIDIA stock was up about 16% today. If you listen to these conference calls, I'm going to sound like a broken record about this. All roads lead to NVIDIA. Facebook's paying NVIDIA. Microsoft's paying NVIDIA. Google's paying NVIDIA. Plenty of companies are paying NVIDIA. OpenAI is paying NVIDIA. Everyone who's training large language models in some way is paying NVIDIA. If you're building a data center, you're paying NVIDIA. I think NVIDIA is going to be the poster child of this bubble, and it will be the one. When it bursts, that will be the end. I don't think we're there yet. The stock sold off from 140 all the way down to 100, and if you were smart, you could have caught a 20% gain in a day if you bought the lows yesterday. And I have a $150 price target on the stock, so I felt compelled. Yesterday, I did buy some call options that expire after earnings. So full disclosure, I am long NVIDIA. It's one of the only semiconductors that I own because I think that they are outsized exposed to the growth industries right now. So I do think NVIDIA is a very interesting stock here. I didn't buy more today. I thought about it, but it already had run, and I was kind of curious what was going to happen with these upcoming earnings. But yeah, we're seeing it. The tech companies that are training language models and generative AI and inference engines, they're all using NVIDIA hardware. And NVIDIA is making like 80% gross margin on this. They're growing their revenues at triple digits still. They're growing their earnings at multiples of that. So yeah, they're growing rapidly, and I would recommend that stock. Obviously, do your own diligence. Consider your own risk tolerance, all of that. Never put all of your money in one thing like me, because I'm an idiot. But yeah, there is, most of my portfolio is still in Nintendo right now. I own a little bit of GameStop, but I am considering selling my GameStop and buying NVIDIA because NVIDIA has actual fundamentals that are good, whereas GameStop is like a joke that's attached to $4 billion on the balance sheet at this point. And I don't like how their CEOs are behaving. Meanwhile, Jensen Huang is a great CEO, and he's doing an amazing job. And that company has just been able... I'm always impressed by NVIDIA's ability to pivot to be the company that's killing it in the thing that everyone's talking about, right? So it was the crypto stock. It was the computer vision stock. It was the VR stock. It was the blockchain stock. It was the cloud computing stock, right? And now it's the AI stock. And I really think you got to credit them for being a diversified company that can pivot so quickly. I do find that very impressive. But yeah, NVIDIA is on fire still. So I hope that answers your question, RMS. Someone wanted to talk about the utility sector broadly, so that's XLU. It's sitting very close to a recent high, but it peaked back in 2022. This is a sector that is very sensitive to interest rates. So if the Federal Reserve is going to start decreasing interest rates, this ETF will become more compelling because its annual yield is 3.22% right now. That's not that great when you compare it to yield curve of the Treasury, right? Like, let me see if I can pull up the Treasury yield curve real quick. Interest rate statistics. Here we go. So for today, the annualized interest rate on the 1 month Treasury is 5.4%. Let's go to the 1 year Treasury bond. 1 year yields 4.73%, and the 30-year yields 4.3% annually, 4.35%. My point is, you can get a better return from an income dividend perspective on treasuries than you can on the utility sector. I also don't necessarily like the components of the utility sector. So like if we look at XLU and you look at some of the components, ETF holdings. So this might just be the top 10, but let me see what we got here. Cookies. I will accept your cookies. Holdings. The largest holding is NextEra Energy, which I talked about last episode when we were talking about alternative energy. Southern Company, Duke Energy, Constellation Energy, American Electric Power, Dominion Energy, Sempra, PG&E, Public Service Group, Exelon, Duke Energy. Yeah, there's just a lot of, I would say, some of the most boring companies on earth. They're stable. They have stable cash flows. Except for a company like PG&E, which sets the state of California on fire every other year. I do think that's a risk to owning some of these. Some of the ones based in Texas seem to be having problems just with handling their grid. But outside of that, like, this is a very boring sector. I would pay attention to the treasury curve because if you're getting a better return in the treasuries, it's safer. Because this is not really in my opinion, this is not a sector that you go to for capital appreciation. It's a sector that you go to establish income. And if income is your goal, like a dividend or interest income is your goal, I would recommend buying treasuries instead because they're safer. You guarantee a certain return if you hold it for that duration, where you open yourself to equity risk and PE ratio contraction and all that stuff. But as interest rates as the Federal Reserve decreases interest rates, I do think you're going to want to pay attention to this industry because the rates may improve relative to the treasuries, and then that becomes a different discussion. So maybe this is something I'll keep an eye on throughout the year here because there may be a time where that flips, right? Where the treasury yield becomes becomes less compelling than the XLU itself. But yeah, if you're investing for dividend income, I think there's better places to look. And if you want safety and income, I think treasuries are a better place to be. But thank you for the question, DK. DK Rules or DK Rules? I think it's DK Rules. Donkey Kong Rules, right? And then my good buddy Jingle Bard asked, I'd like to hear your best Nostradamus about when Microsoft, Sony, and Nintendo are going to be releasing new consoles. So this is a good question. Not really about Sony and Microsoft as much, but about Nintendo. We're gonna get Nintendo earnings this week, and if their R&D expense materially increases, that would be a signal that they're getting closer to making that Switch available for purchase. I don't think we're gonna see it this year. I don't even know if they're going to announce it this year. But so far, I see no evidence of that. Sony, I think they're in a PS5 era. I think the PS5 era probably has like 3 or 4 more years left to it. Maybe there's a PS5 Pro, like, that stuff, like that can come. But like, I don't think PS5 is done yet. I think there's still software to come out for it. They have an install base of 50 million plus units, so why not sell more software on it? Like Wolverine hasn't come out, GTA 6 hasn't come out, so why release a system ahead of that? Don't you want more people to have the systems in their hands when GTA 6 is out? So yeah, I think that's going to be the consideration for both of them. When it comes to Xbox, who knows? I don't know. Their head of hardware just left. The guy who invented the Kinect, he left. So I don't know what they're doing on hardware front. And if you listen to their conference call, they were talking about Windows and they were talking about Game Pass. They were not talking about hardware. Hardware decreased. What was it? Hardware sales decreased like 42% year over year at Xbox last quarter. So yeah, I have no idea what Microsoft is thinking when it comes to their next generation, but I don't think they do either. So yeah, sorry that I don't have a better enough answer for Microsoft and Sony. I just doubt that we see brand new consoles from them in the next year. Like, I mean, I don't know what the hell they're going to call the next Xbox. But then, like, PS6, I think it's a few years out. That'd be my guess. But that's pure conjecture. Nintendo, they told us, we're going to announce this before March of next year. So at least they're going to announce it by March of next year. I kind of think it's going to launch in March of next year. Like maybe towards the end, but like so that they can still kind of get it in the fiscal year remains to be seen. We don't know. And there's nothing in the supply chain that indicates that. And I mentioned it earlier, but if you missed it, Nvidia is going to be the supplier to watch. If they mention something about gaming in their quarter and they're like, hey, we just got a huge order for Tegras, it stands to reason that that's going to be Switch too. So we'll see. But I think Nintendo's also waiting because maybe the yen strengthens and then they can create a purchase order with a stronger yen than they currently have. Because, I mentioned how interest rates could affect things too. I do think that when Switch 2 is released, it'll cost $400 as opposed to the Switch, which costs $300. It's also wild that Nintendo's Switch has never been discounted in 7 years. That's crazy to me. So we'll see. But yeah, I don't want to really go pull the cart before the horse here because Nintendo reports this week. So it'll have to be something I address in the next quarter. Obviously, read Shacknews. We will talk about Nintendo earnings extensively when they drop at butt-ass o'clock on Thursday night here in America. But yeah, let's see. Any other questions? Surgeon asks, will Intel recover? This is the long-term chart. Intel peaked in the year 2000 at around $74.88 a share. It's currently at $30. No, Intel will not recover. Seems crazy to say, but they're in the wrong places, and they keep investing in stupid things as opposed to like growth sectors. They missed out on 3 of the biggest trends in semiconductors in the last 2 decades. So I have zero faith that they can execute. And they even came out and said that they lose money in their foundries. They actually don't make money in American chip production. So that's not great. Sorry. I wish I had better things to say, but yeah, I don't think. I would rather own NVIDIA. I would rather own Qualcomm. I don't know what they said on the conference call, but I'd rather own Qualcomm. I'd rather own AMD, which is crazy to say that AMD is now bigger than Intel and better. I'd rather own Taiwan Semiconductor. I'd rather own ARM Holdings. I just think there's better stocks in the semiconductor space to own. Even Avago, Broadcom would be a better one to own. So no, I don't think Intel's going to recover. They need to drastically change what they're doing. And the problem is, it's kind of like the legacy automakers, right? Where like GM and Ford, they have all these factories that are built around combustion engines. And now they're like, we can't pivot fast enough to EV. I think Ford reported like negative 187% profit margins on their EV division. So it means they lose, for each $1 they make in sales of an EV, they lose $3 basically. So the economics of that are not great. And I think that Intel's kind of running into that because most of their factories are kitted out for CPUs or discrete graphics processors. And yeah, they have a server business too, but they're not on the cutting edge of the AI revolution. And they weren't on the cutting edge of the crypto mining revolution or computer vision. They're talented people that work there. I'm sure there's some cool things going on in R&D, but their infrastructure is built for something that it does not have the demand that it used to. That's no. With the current leadership and their current strategy, no, I don't think Intel's going to make it, or succeed. I don't know what you. Let me go look at what you were saying. Recover, I believe was, yeah, you said recover. Will Intel recover? I take that to mean, will it go back to its all-time high? No, it won't, because the market was far different in 2000 than it is now, and they have a habitual problem with betting on the wrong things, and it's really unfortunate. But yeah, I'm not gonna. Nope. Last one from the chatty, and thanks everybody for your questions and your comments, and shout out to Sharif for just saying no requests, but I love these things. It warms my heart. Thank you. And if you're watching this VOD later, thank you for tuning in. You should check it out on, we have a Shacknews VODs channel that I can shout out here if you're watching it live. Yeah, there it is. Give it a follow, or a like, or a subscribe, or whatever the kids call it these days. So Palantir, I do not understand what this company does. I'm going to throw it out there. I do not really know this company well. I want to say it's a security company, like a cybersecurity stuff. But yeah, I was taking a look at its fundamentals. It trades at 80 times forward earnings. That's expensive. It trades at 15 times book value. It's a tech company, so okay, fine. But it's still kind of expensive. It trades at 26 times sales. That's expensive. It trades at 219 times trailing earnings. That's expensive. But it means that their earnings are growing because their PE is shrinking. And the market cap's $58 billion. That seems like a lot. With a revenue of $2.3 billion a year, to be trading at $50 billion is a lot. Short interest is only 3.6%, so there's not really a chance of a squeeze here. It isn't held by law institutions, only 42%, so maybe there's that. They are profitable, so they have that going for them. They have enough cash. They're sitting on like $4 billion of cash, not a whole lot of debt. So it's not a bad company, but I don't know if I would own them here at the current valuation. So let's take a look at the chart. On the month, it was able to get above the previous high. So we are sitting, you're at risk of kind of hitting a slightly lower high here, which could beget selling. But yeah, I don't really have a good read on this stock. I apologize, but just from a technical standpoint, it does look like it's recovered quite a bit. You would want to watch for a breakout above this high of 29.83. Yeah, slightly higher high. Those are always scary, because that means that you could have a broadening formation here that you're tapping. You're just barely bumping your head on before you sell off again. So I would watch over the next month to see how it deals with the previous month's high. Sorry, I should have showed you on the chart. Here's the chart. So yeah, like here's the previous all-time high, or not a high, but the recent high, and then it was obviously a failed scenario. Now it's slightly above that previous high it hit earlier, and then it came back within the range. So I don't know. I would stay away from it just because of my fundamental nature, and I don't know enough. But I don't really know much about this industry, and I don't know why are they being given such a premium. I don't really understand. So when I don't get something, I research it, but also if I know it's not in my core competency, I just kind of move along. And this is one of those. So I apologize that I don't know more about this stock, but yeah, I don't really have much to say about it, unfortunately. So that's everything. Thank you for everyone who watched live here on Shacknews Twitch. Thanks to everyone who's watching this VOD later. We do this once a month. It is the last trading day of the month is when these episodes will air. So it's been on a Friday a couple of times in a row. I can let you guys know right now that August 30th falls on a Friday, and that will be the last day of trading for the month. So that will be the next episode of Game Trader. You can follow us Shacknews YouTube. Our VODs will be there. And follow us on social. There will be clips from this episode that will appear there probably. And yeah, we have a lot more coming up. Shacknews, we cover earnings pretty intensely. So we have Apple, Amazon, several other companies are reporting tomorrow. I think it's I want to say it's maybe the busiest day we've ever had for earnings at Shacknews tomorrow. And I'm recording a podcast. But yeah, so you have Roblox reports in the morning, Apple in the afternoon, Amazon in the afternoon, Corsair in the afternoon. Oh, Intel reports in the afternoon. So we got Intel tomorrow. So tune in, Surgeon, to see how bad things get. Snapchat reports tomorrow afternoon, Universal Display reports tomorrow afternoon, and Nintendo reports late night tomorrow. So a lot of stuff to watch for at shacknews.com. And also on our YouTube channels and also on Twitch, because we will be live streaming. I believe we're going to live stream Apple here on our Twitch channel and Amazon to YouTube. So you will be able to watch and enjoy the festivities around these conference calls. And yeah, tune in if you want to hear Tim Cook say nothing for an hour and a half. Boy, do I have the stream for you tomorrow. But that'll do it. Before we go, let's do a thought experiment. What do you think? So in 2017, I bought a Tesla Roadster pre-order, Founders Edition, for $250,000. This is probably the dumbest thing I've ever done with my money, and I bought Shacknews. So what I like to do to teach people this concept of opportunity cost is, let's say I did something else with that money instead, right? So I think the first time I did this, it was with NVIDIA. I'm going to do it with bookings.com. That's the company formerly known as Priceline, right? So the stock was trading for 1,600. This isn't that good of an example. You know what? I'm going to do it with Tesla, just to piss myself off even more. Sound like a plan? Okay. Tesla in December of 2017 traded for $20. So 250 divided by 20. That means I would have had 12,500 shares that I could have bought instead of Tesla's stupid Roadster. And it's currently trading for $232.80. That $250,000 would have been $2.9 million today. Congratulations on the free loan from me. The free 8-year loan from me, Elon Musk. You fucking douche nozzle. But yeah, if I had just bought Tesla stock instead of the stupid Roadster, I would have made $2.65 million. $2.65 million. Instead, I got jack shit. You want to see what I got? Absolutely nothing. How about that? You'll get nothing. But maybe someday I'll get a Roadster. They said they're going to deliver it next year, which they've said every year for 8 years. Anyway, just a lesson in opportunity cost for the folks at home. And just a way for me to leave this stream super pissed off and depressed. But anyway, manage your risk. Please, for the love of God, know what you're risking in every trade you do, every investment you do, and every stupid Tesla pre-order you do. Because opportunity cost waits for no one, and it will make you feel stupid. Boy, howdy will it. So if you've ever made a mistake investing or trading, you have not made a mistake that big. Hopefully. And if you have, I feel your pain. So that's it. The company, what company might have bottomed out? Sam, what are you talking about? Tesla? I don't think so. I think it's going lower. But yeah. So that's it. That's the stream. Thank you for watching. And yeah, we will be posting this VOD. It's going to be a weird episode because the middle of it is just the Facebook conference call. So I don't know if we're going to try to segment this out or what. Oh, you're saying bookings? I would have only made like $700,000 or something. It wasn't as big of a number, so I decided to go with something else. They're only up. Bookings is the one, Sam. Like, if we want to just talk about like missing something in general, bookings. Let me pull up this chart real quick. You know, I'm gonna order my big ass salad so that they will have it there when I get there. But yeah, bookings. Here's the long term chart of bookings, Sam. And I just typed booking instead of big ass salad into my phone. But yeah, bookings.com, a good example of this, Sam, is like, I don't know, 2001, the stock was trading for $8. So let's say you bought, let's just say you bought $1,000 of booking.com in the year 2001. You would have 125 shares that are currently trading for $3,732. So that $1,000 would be $466,500 today. So that's pretty crazy. But that would have taken 23 years to happen. So that's more of a lesson on being patient with your holdings than it is opportunity cost. Because in the year 2001, I didn't even have $1,000 to buy books at the University of Michigan. It was a different time in my life. The iPod had just come out. My Apple shares were not worth what they were when I sold them. But yeah, I am ordering my salad. What's going on here? Oh, I can just pay with Apple Pay, right? There we go. Do the Face ID thing. Sorry, they close at 8, so I have to order it. Make sure that I get my order in. Been doing it for Shacknews too much. You gotta eat. You do it for Shacknews, it makes you hungry. But anyway, everyone has regrets in life. Mine is that I bought a Tesla Roadster 2, Founders Edition. I would have rather had that money. But what are you gonna do? I'll just keep shit posting on Elon Musk's tweets till the end of time. But yeah, do you think it'll come out next year? Probably not. So I'll do it. Thank you for watching, everyone. Subscribe, follow, all these things up here. Right? All these things. All of them. And even Shacknews VODs. So that'll do it. Thank you for watching. Any other questions before I go? Comments? Nothing? Do you want to shout at me? No? No. Cool. Pikachu waving. Thank you. So I'll do it. Thank you for watching. And like I said before, manage your risk. Know what you're risking. Define your risk so that you know if I lose this, it is not the end of the world. It's a super important thing. It sounds really basic, but it's a thing that you should just write down on a post-it note and put it on your trading desk. Manage your risk. Know exactly how much you're risking. And understand that the stock market is governed by computerized trading. Even if you think you're better, even if you think you have a strategy, there are rules that govern the stock market. And once you learn them, they can be very valuable. They can help you explain price movement. They won't help you predict it. They will help you explain it when it happens and know what to do once it happens. So, yeah. I do want to just shout out my, you know what? I'm going to just put up a picture of him before we go. Because, yeah, this is the anniversary of the death of my mentor is this month. And Rob was awesome. A very good friend of mine. And, yeah, just shout out to the GOAT. Rob Smith, the creator of the strat. Rest in peace, buddy.